All right. Today we are joined by Sam Shame. Sam is the director of equities at Simpler Trading, an online educational trading company founded by John Carter. With a top-down strategy, Sam's expertise lies in equities, option futures, crypto, and macro using short-term swing trading. He works to understand the markets through technical analysis and by recognizing the distinct psychology and correlations of each chart. Sam leads many courses and webinars for the Simpler community, and you can find him daily in the options gold room and options training room, which we'll get Sam to tell us a little bit about that in a minute here. Sam has been trading since 2007 and has been trading cryptos since 2014. Is that right, Sam?
15.
Oh, 2015, since 2015. That's about when I got into it, 2014, 2015, and was introduced to Bitcoin, and that was my first exposure, and then started getting into Ethereum, altcoins, things like that afterwards. But what I'm trying to do is bring the foremost experts in the business, kind of share some trading strategies, what you're seeing out there. Bitcoin is an interesting animal these days, and we appreciate you taking time out to join us.
Yeah, happy to be here, Greg.
All right, cool. Well, go ahead.
All right, so we're going to be taking a look here at a chart of Bitcoin, and we're just going to go ahead and dive right on in. We're primarily technical traders here at Simpler. One thing that I came across when I first started trading was the desire, if you will, to trade somewhat fundamentally. But what I quickly realized was that I was outmatched by pretty much every hedge fund in the world, right? They all have thousands of analysts, the best, most up-to-date information, the treasure chest of millions or billions of dollars. So competing with those guys in their game is a little bit difficult. And then very quickly, when I started trading back in 2007, I realized the only way that I had a chance was actually to just interpret the charts and interpret what money is doing instead of trying to out research them. So we come to the charts here at Simpler mostly through a technical approach. So with this session, if you will, to the technical indicators that I use, and maybe more importantly, why I use them. So let me just pull this up very quickly here. So the very first thing that I have done is, and I do advise that for anyone who does trade Bitcoin or crypto in general, that you try to do something like this. So you'll see that I have a Bitcoin chart pulled up here on TradingView, and you can go to any specific exchange, right? You do BTC USD, it'll pull up Coinbase, it'll pull up a number of different exchanges. There's many of them. But what I'd like to do here is actually just combine them all. So this is the very first thing that I did here when I started tracking or trading Bitcoin, is combine not only the BTC USD values, but then also combine them with the Tether values, because Tether is such a large part of the volume that takes place. It's important to integrate it into the chart. So you'll see right here, this isn't just a basic one single exchange. I've actually taken the top 6 exchanges, combined all the data, the volume and the prices, and then just divided by 6 to get an aggregate understanding of price. So I think that's kind of a important first step. From there, I like to keep things simple. So there's some lower indicators. We'll get to those in just a sec, but I like to keep things simple. Oftentimes you'll have technical traders and they'll have 5,000 different moving averages, but I found that just keeping it very basic is the best. So the best moving averages that I currently use on crypto and pretty much in everything is the 21 EMA or exponential moving average, the 50 SMA or simple moving average, and then just a 200 simple moving average, and keeps it very simple. And you can see oftentimes really it does track the trend extremely well. So that's the first thing is, find some moving averages. Don't do too many of them, obviously, but find some that work for you. I think this is a great basis to start. The 21 EMA and then the 50 and the 200 SMA. From there, you kind of need to round out your toolbox, right? That's not going to be just enough. You still don't know what momentum is doing. You don't know, there's a lot of things that remain invisible just with moving averages. So we go to the lower indicators. And the indicator here that essentially built Simpler Trading and kind of launched John Carter into prevalence and really has built his account over the years is this. This is called the squeeze indicator. And a lot of you, I'm sure, are familiar with it in some version or another. But markets tend to move in 3 different directions, right? They go up, they go down, and then they go sideways. most of the time they're going to go sideways. And it's during these times of sideways compression that we want to isolate these moments so that we can capture the inevitable expansion, right? From every compression will then come an expansion, and that expands the range. And that's what you want. That's how you get those really beautiful trends. So to describe the squeeze indicator here, in short, the size of the histogram or the direction of the histogram tells you whether it's biased to the upside or to the downside, right? And then if you have dots here, so you'll notice this is actually a really important kind of critical moment in time for Bitcoin. So it's a little bit of coincidental or happenstance that we're covering this, but you see how these dots right here are blue. Really, there's not very many other blues. There's some reds, there's some grays, but the blues stand out. Now, the blue indicates that it's what we call a high compression squeeze, meaning that the price has gotten so tight that it's kind of like a coiled spring, right? It's like a tea kettle that needs to burst. You can see here actually that it also has an upward bias, right? Just that one little dot of histogram, which gives you a slight, and it's early, but it gives you a slight directional clue that this compression that's currently taking place wants to break to the upside. So kind of understanding that, then we kind of go down here to the price. I'm going to get rid of these lines here. These are just these are Fibonacci level. I'm going to cover those, but I'll dump them for now. And you can see that price is trying to get back above a very important level, which is the 21 EMA. This is kind of like the lid on the chart. So you have two things kind of coming into play here. You have this ultra tight compression from where from essentially where it crashed, hasn't done anything for about 3 weeks, which leads to this compression. And now it's giving you an upward bias to the squeeze. So probabilistically speaking, at this point, it's probably 60-40 that it actually wants to try to break out to the upside. So that's just a little bit of clues there. And then below that, we talked about the markets moving in 3 different directions, right? Up, they go down, and most of the time they're going sideways. So it's important to have, in my opinion, 2 different momentum indicators, right? One that will work for the choppy sideways consolidations, and then another one that will work for trending conditions. So this one is a trending indicator. Now you can see here that it's, I don't want to get too in the weeds, but there was actually a lot of signals given by this very indicator. And maybe I'll point out a few. Bitcoin was actually about to have some big problems. So notice, for example, here is a high, right, on the indicator. And then here's a lower high on the indicator. And honestly, here's a third lower high, right? So the indicator is actually printing sequentially lower highs. And then if you look at the price coincidences or the occurrences, the first high was here, the second lower high on the indicator is here, and the third lower high is here, right? So what does that create? It creates, there's a high, there's a high, there's a high, right? The highs are falling, but notice what price is doing. Up, up, up. So that's one critical divergence. You want your momentum to mirror your price. And when you have this, what's called a divergence, when momentum actually is waning as you make 3 sequential pulses higher, well, this is more than I was looking for, but it does lead to falling out of bed typically. The good thing is this has been resolved in the short term. Now, the last indicator, a real basic one, but it's just kind of our take on a stochastic, which is the indicator you would use for choppy markets, right? Now, we haven't seen Bitcoin chop too much, but imagine if Bitcoin was kind of trading like this in a range. This indicator would help you find the high of the range and the low of the range, and just give you a little bit more momentum. So that's pretty much it. You need something that captures the volatility. The squeeze does that better than anything I've ever seen. You need something that captures trend. I like my indicator here. It's called the trend oscillator. And you need something that captures range. And this is what we use.
Are these all lagging, leading, real-time indicators? How do you apply them?
Well, most indicators are going to be lagging, right? Most indicators are derivatives of price. So you'll typically need to print the price candle before the indicator will react. There are times, though, just like I showed you here on the the divergence, that they actually, in a way, I don't want to say they lead price, but you can see here the critical divergence between that high and that high. versus when you go to price, you had that, right? So you had this versus that. So in that instance, the indicator actually led it, but by and large, they're going to be slightly lagging because they're derivatives of price. The squeeze, however, is somewhat of a leading indicator, right? Because
Mhm.
it's looking for that compression phase. So a combination of both.
Yeah, yeah. So that's what's interesting, and that's why I asked that question because it seems like the squeeze is indicating what everybody's expecting: a little bit of a spring up, and then maybe we're a little bit of a bull trap, and then maybe we're in a little range, and then we head back down to possibly test the lows, or even maybe hang out down there for a while and then breach that before we ultimately resolve and or back off to the races again, or at least an upward trending market cycle. Like we've been in for the last 18 months.
Yeah, yeah. You just basically described exactly what I'm looking for. It's exactly that. It's a little bit of a pop here, kind of gets everyone jazzed up. It's like, oh, the crash is over, and then
Mhm.
the bull trap hits them, and then we get the second wave lower.
Yeah, yeah, it's
I see.
interesting because I think some people, not too many people, but some people were thinking, oh, maybe it just drops straight down from here a few days ago, a week ago, and doesn't really test much in this range. And then I think the consensus is we're looking for a bull trap. But the interesting thing is, everybody knows that, everybody's calling for that. So if you're on the other side of the trade, what do you do now?
Um, the other side of the bull trap idea.
Yeah, yeah. So you're setting the trap, and now the word's out. Everybody knows it. I mean, everybody's picking up on it. There's more and more technical analysts on YouTube now, and everybody's saying the same thing: bull trap, bull trap, bull trap. It's going to spring, then it's going to go down. Now, obviously, that's not guaranteed, but that's the table that's traditionally been set, and you can go back and look at all of the indicators and where they line up on the charts of Bitcoin's history in this scenario, and they all show the same kind of stuff. So if you're on the other side of the trade trying to trip people up, what do you do?
Well, I think you have to let it pop. If you're looking at it from kind of the side of the market that would set the bull trap and kind
Mhm.
of pull the rug out from under it, I think it has to pop enough to the point where people would actually start to believe. I don't keep up a lot with the Twitter sphere or
Mhm.
maybe, the rumblings as to what the consensus is. So it's kind of a surprise to me to hear that most people are actually expecting a bull trap.
Yeah.
Because, like you said, when everybody expects something, that's when it doesn't happen.
Right.
Um, yeah, I mean, it's hard not to see it that way, though, just because I'll show you just one more take here. If we switch, this is a daily chart. If we switch it to a weekly chart, this is really where I think the work has to be done, because the daily chart, like we just saw, it does support the potential for a pop higher. However, if you mix it with the weekly, it
Mhm.
doesn't support it. If you look at this indicator here, this is again the squeeze, and the squeeze tends to work kind of like a sine wave. So every peak has a corresponding trough, and then it just kind of cycles through. And you can kind of see that back here, right? This is kind of a classic one right here. So if we're coming off, if this is the pattern that historically repeats in everything, not just Bitcoin, then you have this gigantic kind of sine wave, but you have not even come close to completing the trough, right? It
Mhm.
typically should look more like this, right? In keeping in mind that each bar here, and there's a lot of them. There's like, I don't know, 20 or so in there. That's all. That's one bar per week. So that's 5 months.
Oh,
So
wow.
yeah. So, in this instance, we're 2 weeks into the trough.
Yeah.
Projecting it out, it would say that this isn't ready to turn.
Okay.
Because there's almost statistically no way that this goes 2 bars lower and then pops higher. That just doesn't happen. They all will typically look like this.
Okay.
Yeah. So that this chart right here is the reason that I think, and I don't know, if you're kind of looking at the same level, but I'm looking a little bit more towards the 2017 highs as a potential place of retest, which is right
Mhm.
about there.
Right.
Yes.
And that's the screen's kind of small. What is that around the 20,000 level, 19?
Yeah,
Mhm.
20,019. Yeah.
Yeah. Yeah, that's kind of, what a lot of people are looking for. And I think where the trap ultimately could be set is the least expected thing is to kind of stay in this range for
Mhm.
months and just wear people out, get people not paying attention and catch them off guard.
That would be that'd be the most brutal thing the market could do
Yeah.
is if it stayed in this range, and therefore it's not unlikely, right? Because the market
Yeah.
tends to move in the most aggravating way for the most amount of people. And
Yeah. And that's what it, that's what it seems to be doing. And then for a trader, I mean, it's a great range. I mean, you're in the 30 to 40 range where a lot of people expected it to have bounced up a little bit above 40 and be in that 40, 45, maybe even 50, and then, set your bull trap.
right, right. If you kind of just project across the lows here, just kind of a general place where shorts would have stops, in terms of, you go up high enough to just trigger the short stops and kind of get them out. It would take you into about 40. The range is really from like 44 to 48.
Right. So what else are you trading that Bitcoin and other markets relates to? Because a lot of people look at Bitcoin and think it's kind of its own thing. It doesn't really follow trends of other markets and you can't really analyze it the same way.
That's that's become true. Back when I first started trading crypto, it was actually moving very closely with bonds.
Hmm.
So what you could do is actually, well, I won't do it here, but what you could do is actually take a chart of the 10-year yield, and it was dropping. But if you inverted the chart, start to go up, and the 10-year yield inverted would mirror Bitcoin.
Oh,
That,
wow.
yeah, it was really close and very close relationship for a long time. That dynamic has changed, especially ever since Bitcoin just broke out, even though bonds started going lower, interest rates higher. So now I actually don't think that it very well correlates with anything. It really is its own ecosystem in a way.
Yeah.
There's stocks that will correlate back to Bitcoin, but I wouldn't say necessarily that Bitcoin correlates to any specific asset class other than itself.
Yeah. Yeah. And well, I guess it's tracking with the markets a little bit more so maybe than in the past. You can see a little bit of, flows back and forth there in and out of the markets, in and out of Bitcoin.
Yeah, maybe as a liquidity proxy.
Hmm.
One thing that would make sense that because the markets are moving with so much of the excess liquidity from central banks, and maybe Bitcoin can act as a little bit of a liquidity symbol. How much
Yeah.
liquidity is in the system.
So you're a swing trader. So what time frames are you trading on, looking for, and following?
When it comes to Bitcoin, I really only focus now on the daily and the weekly. I've tried doing the day trading thing, and I found it to be a little bit more work than it's worth. The best money that I've ever made in Bitcoin has actually been just buying a little bit every week over time, and
Hmm.
not looking at it. That's been the most easily the biggest percentage gains that I've had. So to be able to do that, to be able to buy something and consistently every week and not look at it, mostly I'm focusing on the daily and the weekly.
Hmm. Cool. Let's take a look at ETH.
Ethereum.
Yeah.
All right, should be interesting. What's fascinating actually, let me just take a quick detour. I'll go right to Ethereum after this.
Okay.
But if you look at the Ethereum Bitcoin pairing, and you compare them as you would like a Forex pair, Bitcoin to Ethereum, when this chart goes up, this is a favorability towards Ethereum. And when the chart actually goes lower, it's a favorability, so this would be good for Ethereum. This would be good for
Hmm.
Bitcoin. That's good for Ethereum. Um, and altcoins in general, right? So you had a
Yeah.
huge altcoin run here on the back of Ethereum. But one thing that I noticed, and this caught me a little bit off guard, is this is actually putting in some bearish structures. So if indeed this is kind of a higher low here that's developing, and we're starting to see the momentum kind of wane to support the idea, a little bit of a bear flag actually, so I would look for kind of a pullback to about there. If you look at the indicators, you can see that they're actually rolling over. So you see how you kind of reach the peak here and you've kind of come down a little bit on the histogram.
Hmm.
And then here, this indicator, you see how we went on to make, it's a lower high certainly, but notice this indicator has not ticked higher at all, right?
Hmm.
It's just kind of been falling. And then here, it made a low here and it's got a lower low now. So there's actually some pretty good indications that Bitcoin will be the more favorable coin, at least until this resolves, which probably
Yeah.
takes a few weeks. Which is interesting because Ethereum was such an outperformer.
Hmm.
If I start looking at the Ethereum chart on its own, It's a dangerous chart is really the way that I see it. It is still above the daily 200, which is coming in right around 17.9. Um, the squeeze does say higher, right? We covered how the histograms kind of give you a directional tell there. But if you look at the momentum signal, you see how for a very long time here, at least since right about here, and that was the middle of October, this red line has been above the center,
Hmm.
and now it's actually kind of bled through. So that's a big change. That's a really drastic change, and that hasn't been the case since October. So if we go back to price, um, it's it looks a little bit dangerous here, I would certainly
Hmm.
say. And kind of combining all the information that we've looked at so far, it does appear to be that if Bitcoin would be the more favorable coin in the short term.
Yeah, and a lot of people were looking for ETH to flip Bitcoin in market cap, but as we have been in this downtrend, ETH is losing a lot of ground in that regard,
Yeah, yeah.
and
Well,
fast.
yeah, yeah, and that's actually the expectation, right? Like that's the way that it traditionally trades is
Hmm.
when you have a true bull market, Ethereum will do the outperformance to the upside, but then gets hit harder to the downside. What we had actually noticed was that it was doing half of that, but not all of it. So
Hmm.
here, all through here, it was doing the outperformance to Bitcoin, but then even through here, it was still outperforming. It's
Hmm.
really only recently, right about in here, that it's actually flipped and it's starting to underperform.
Yeah, yeah, that's really in the last, what is that, week, I guess, and that's what I've noticed.
Yeah, yeah.
It seems like in the last week. So, I've got a strike zone for ETH back down around 1,000. So, we'll
Oh
see if
wow,
it gets there.
wowza.
Hmm.
Let me take a look there at the 1,000 level. Wowza. Yeah, I mean that would certainly stop out all the market. Certainly.
1,000, somewhere in that range. But, I've got some targets down in that area, and I've seen some charts and some analysis that especially if Bitcoin has a nice rebound, it could definitely send ETH down in that general range.
Yeah. Yeah. I don't have a target on Ethereum as clean as I feel like I do on Bitcoin.
Hmm.
My Bitcoin target right now would be roughly 20,000. So it's
Hmm.
trading 36, probably about 40% would, 36, 40% of 36 would probably be like 20. So if you projected 40% here on a roughly $2,500 product, I could see you kind of getting, yeah, yeah. I mean, you'd end up right around 1,200,
Hmm.
1,300.
Yeah,
That's nice.
especially if Bitcoin moves like we think it's going to move. So I think that's where you're going to be on ETH is that 1,000 to 1,200, and that's where I'm loading up the trucks. And Bitcoin's interesting. So I think what's happened is with the attention. I mean, there's been a lot of good news, been a lot of bullish news on Bitcoin, and of course, there's always been the opposite as well with the ESG argument. With regulation, all the different aspects that proponents against Bitcoin. But what's really interesting is with the broad adoption that we're seeing, more and more trading platforms getting in the game and bringing on Bitcoin, Ether, maybe a couple of the other altcoins and allowing trading. PayPal allowing trading. Amazon now is investigating blockchain and looking to get into the game. We don't know what they're going to do ultimately. Are they going to compete with Bitcoin? I don't know. Create their own token. We know they want to become a bank, so that'll be interesting to see how that shakes out. But where I'm going with all this is at one point, there were charts and targets that could take Bitcoin as low as 10,000 through this cycle of shakeout. But I think now that might be off the table given the participation that we've seen, especially lately since Bitcoin's dropped and a lot of people coming in that probably otherwise wouldn't have come in.
Yeah, I think 10,000 is a little bit more drastic than I've seen. I think when you said that, I was going through my head as to the possible scenarios that could potentially get that to happen,
Hmm.
and there's really only a handful. The only one that I could think of that would potentially get Bitcoin back to 10,000 from this price would be something along the lines of Tether having some serious issues.
Hmm.
Because Tether being the liquidity of the market essentially, and there's some suspect parts of the Tether system. If
Yeah.
there was any kind of malice or ill intent behind Tether that was found out, then you could definitely get back to 10,000.
Yeah, yeah, and there are some questions out there, and we'll see how that all shakes out. But and barring a big event in the stock markets, I think that would be the other thing that could drastically affect Bitcoin there, because then everybody's just going to be looking for liquidity at that point.
Yeah, that's it. Absolutely. Liquidity
Yeah,
events always hit crypto.
yeah. But other than that, I think the consensus is if we do retest, that 19, 20,000 level is probably about as low as Bitcoin's going to see. But we saw what happened in March. It dropped down all the way down to, what was it, $4,600
Yeah.
18 months ago. So
Yeah.
I did a little video today that, one of the things to consider is just because, if we can go back to the Bitcoin chart, just because Bitcoin hit 65,000 doesn't mean that 35,000 is cheap, because when Bitcoin was 20,000, it dropped all the way down to 4,600, at one point. And then rose back up. So was it cheap at 4,600? Based on where it had come from, was 20,000 cheap? So it's really interesting. But I think right now, what I'm seeing is, a lot of people think we might get a bounce in a spring up into that 40, 50,000 range before we get an ultimate drop. It could very well be possible that this is our upper range of the low of this correction before we get another leg down to test.
Yeah, that's the way that I'm looking at it as well. One thing that I was doing here is just one thing that I've noticed with my time trading crypto that also, oddly enough, seemed to apply to the .com bubble is it does tend to drop 82%. It just has a habit when at least in worst case scenarios, it does have a habit of dropping 82%, which was the same level that the Nasdaq dropped in the .com era. There's actually a ton of parallels between .com and Bitcoin, which in the long run implies very good things. But I'm just quickly going to try this out. I'm measuring from the high 82% down just to see roughly where that kind of lands us, because that has been historically kind of worst case scenario. Yeah. So roughly, if we did do the drop to historical worst case scenario, gives you right around 12,000, 11 to 12.
And that's where that 10,000 to 12,000 number came. Now, the other thing that's interesting about that is where I targeted the beginning of the bull run in 2020. So we started in September, ish back in 2020, and we were at that 10, 12,000 level. I think that's where the bull run started for this cycle. Or at least that's where I think you can, pinpoint it back to it. After the March drop.
I see. Yeah.
You see what I'm saying?
Yeah. You got a little bit of consolidation there.
Yep. Now you could argue that we were on the bull run back in January, February of 2020 before the March drop, and that was our start. So if you go all the way back there, then you could argue that, this is not a mid-cycle correction, that we've been on a bull run for almost 2 years. At least 18 months. So this could be the top. And that's the question. Are we at the top? Are we mid-cycle? A lot of people don't see this rollover as a, complete blow off top like we've seen in past cycles. But if you go back, like I said, if you say, okay, well, this bull run began January, February 2020, that's 18 months. And then if you say, well, maybe it was September, after that March pickup, those are the levels we were at, that 10, 12,000 level before this parabolic move.
Yeah. Yeah. I mean, I would tend to agree with you, especially the point that you made about it not having that blow off top characteristic. That's how I would imagine, not to say it has to happen that way, but that's how I would imagine the market will eventually peak. So I would also agree that I don't necessarily think this is a lasting top. Is it a top in the interim? Absolutely. Is it going to take a long time? In crypto terms, maybe just a few months, because 1 month in crypto basically is 1 year in a traditional stock market. Probably a few months, but I'm fairly confident that we're going to see significantly higher prices. Have you seen the stock to flow model for
Yes.
Yeah.
That would indicate that we should be off to the races. And, that's why I'm thinking if this is a mid-cycle correction, then maybe where we are right now is the bull trap bounce. And, maybe we hang around here for a little bit and then head down, retest, and then get back to work here.
Yeah, I actually think the most healthy thing that could happen here would be actually just continued chop.
Hmm.
It would frustrate everyone,
Hmm.
but it would allow this signal that we looked at earlier, which was not complete, which was we talked about this kind of needing to go through kind of something like this, looks
Yeah.
kind of like a saucer. That would allow that to develop because right now this has excessive downward momentum, and you burn that off in one of two ways. Either A, you just tank and
Hmm.
it'll burn off that way, or B, you go sideways for an extended amount of time and it'll burn it off slowly. So that would actually be the
Yeah.
most healthy thing.
That's the least expected, I think, is a prolonged sideways action. I think everybody's expecting a spring up or, a drop back down right now. And a couple of weeks ago, I was saying, well, the one thing nobody expects was just straight down, just a continuation straight down. A lot of people thought we'd get a correction and a bounce. And, it's interesting. So the interesting thing will be to see, have we put a ceiling in right now in this temporary period that we're in? And have we put a floor in? So we'll nobody knows the answer to that question.
Yeah, yeah. And the more that we kind of chat about it, the more it does seem like the least expected outcome is probably the one that happens, which is that extended kind of uh, maybe month to 6 week long consolidation.
If I was a player on the other side and I was trying to accumulate, that would be my strategy because you can see that playing out in the emotions of people in the markets. It's frustrating people, it's confusing them. Everybody's expecting the big bounce, the big drop, and you can see extreme emotions on these moves between 39 and 31. And it's really interesting to watch. Is the minute you start getting close to 39, everybody's like, that's it, we're off to 45 and 50 next. And when you start dropping down to 30, 31, that's it, we're going to 20. So it's really frustrating a lot of people, and it's interesting to watch.
Yeah, and the algorithms and hedge funds behind the algorithms that trade this stuff from within the range very well probably love it. So
Oh yeah, because they're just boom, boom, boom. They're stopping you out up here, bam, bam, bam. They're taking you out down there, and they're just buying and selling back to the same people over and over. And
yeah, exactly.
yeah, awesome. Well, Sam, I appreciate you taking some time out and sharing with us today. Where can everybody? Number one, what is Simpler Trading? What do you guys do, and where can people find you?
So we're a live trading room, primarily focused around education, but we're all real traders. We'll actively trade our real money accounts live in front of the room. Um, the room is open all day. So basically from bell to bell, and you'll have, 6 to 7 traders show up, you know, every day to present what they're buying, what they're selling, and then just kind of go over the ideas. And really, what it is just a live trading community. It's grown to be a pretty big community, but it still feels like a tight knit group. And we all share ideas and try to get together and have some laughs and make some money.
Awesome. So, are you for beginners, advanced? What type of levels?
Really, all levels. We have complex strategies. We have large traders in the room, and that would be a lot more suitable to advanced folks. It skews a little bit advanced. I would say that if you show up and you're a beginner, you will feel welcome, and you will be able to build up to the advanced part. But it does skew a little bit advanced because we're all professional traders.
Yeah, awesome. Well, great. Well, have a great weekend, and thank you for taking some time out. And hopefully, we can do this again.
Yeah, it was fun talking to you, Greg. Thank you.
All right, take care.